Hello, the market is in correction, stocks are on sale, but if you need more peace of mind before looking to buy any stocks even at these discounted prices and are worried that the market could still go full out crash mode, then I believe you may want to consider rotating some of your money into SPACs right now. I will be sharing with you some of the best SPACs that I think that are trading at some of the most ridiculous prices I think you'll probably ever see them trading at again. Stick around because these are, in my opinion, capped risk investments with serious potential upside once the markets recover. Keep it simple. Before we look at some SPACs that I believe at current prices are as good as easy money, please note I do have positions in these SPACs and I am not a financial advisor, so please understand this is all for entertainment only. Okay, for those of you who do not know what a SPAC is or how investing in these actually work, here is a quick intro because otherwise it's a bit pointless to start listening to someone talking about SPACs, right? Anyway, for those of you who are familiar, you can skip straight to the next segment. Simply put, a SPAC is short for a special purpose acquisition company. These are typically blank check companies founded by an investor or fund manager. These SPACs then go on what they call a roadshow, where they try to get investments and backing from large individual investors or institutions. Once they have done that, they will go through an IPO, initial public offering. Most SPACs IPO at a $10 per share price, and normally the SPAC offers three ways investors can buy in, and they are ordinary shares, warrants, or units, which are usually comprised of a combination of a share and a percentage of a warrant. Now I won't go into too technical details, but each SPAC may vary, and so it's imperative to read up on the SEC prospectus filings before investing into any SPACs. Okay, so once a SPAC IPOs at $10 a share, the proceeds of the SPAC IPO are then held in a trust fund. These SPACs then normally have 2 years to find a private company for a merger, which would then take the private company public. What happens when no merger is identified and the time's up? Simply put, the $10 per share minus a tiny bit for administration costs will be refunded to all the current shareholders. What happens when the merger is agreed? If you don't like the merger, you can always choose to ask to be refunded your shares, again at the $10 minus admin fees. You can do this through the broker you purchase the SPAC shares from. So what does it all mean? Simply put, if you buy a SPAC and prior to the merger, you will always have the opportunity to refund for your $10. So essentially what I hope you can now piece together is, if you buy a SPAC as close to $10 as possible, you essentially stand to lose close to zero pre-merger. Well, why? Because post-merger means the target company is now a listed company and the SPAC is essentially finished and changed to the new company's ticker. If we look at Chamath Palihapitiya's IPOB, for example, which merged with Clover Health, it peaked around $17 around the time of its merger date. Now it's trading around $7. So what I need you to understand is that post-merger you do not have the luxury of the $10 safety net. So that is why on merger date, shareholders of the SPAC can either choose to refund their shares or to go through with the merger. Simple, and I hope you follow. So buying a SPAC is kind of like getting in on an IPO.
We're really trying to find disruptive companies who are alternative really to IPOs. We don't view it as a special purpose acquisition company. It should be named a special purpose IPO vehicle.
Okay, so in reverse order, here are the SPACs that I think are well worth your time to take a look into. Atlas Crest Investment Corp are merging with Archer Aviation, who are going to be filling the skies with air taxis in 5 years' time. Okay, I released a recent video drilling into Archer Aviation, which I did raise a lot of fears for me. As a short-term play though, this is really easy money. It went as high as $17 in mid-February after the merger news, so we already know it can fly. Put into this that ARK Invest are buying them up and have over 1.4 million shares. Let's face it, the current $11 share price is just ridiculously cheap. The worst of the worst is you get back your $10, which means you lost 9% at the current price, but I see this easily going back to $7. $17, which is like a 50% gain, meaning for me it's a risk reward ratio of around 5, which is pretty disgusting for a SPAC. I like this as a pre-merger day play, and depending on what ARK does, either by buying more in the ARK-Q fund or even adding them to the coming ARK-X fund, it could send the stock close to $20 in my opinion. I will be, as I already mentioned, taking this as a short-term play which I may get out of pre-merger. However, that is my current play thinking, and it could change depending on any changes to the fundamentals of Archer Aviation. Osprey Technology Acquisition Corp, or simply put Blacksky. I won't go into detail as I have recently released a deep drill into this merger and into Blacksky. Simply put, I believe they have that take over the world, end of the world feel to it. They already have revenues, and I'm guessing that they will be included in the coming ARK-X portfolio. All those catalysts aside, they are trading at $11, which is ridiculously cheap for a SPAC that for me has a strong announced merger. It did go as high as around $15 after the merger announcement, but it did kind of coincide with the start of this market correction. So guess what? I'm taking this as my second chance to further load up and add to my small position. I think once the market reverses, and if ARK-X is announced in April, and if they land in there, for me $15 is a bare minimum, which would be easy money considering the $11 price right now. Pershing Square Tontine Holdings is no joke. Billionaire investor and hedge fund owner Bill Ackman means business, and it is literally the largest ever SPAC, and by going public at $20 it raised a whopping $4 billion. This is just insane, and guess what? Even during this correction, PSTH has only pulled back a little tiny bit in comparison, and is trading around $28 after reaching all-time highs of close to $33 in mid-February. Why is it doing seemingly better than a lot of other stocks and SPACs? Simple. Bill Ackman is doing some serious PR himself on Twitter. Plus, they set up PSTH too. So, investors are simply piecing this together and see it as hints that a deal for PSTH is about to be announced any day. Why is PSTH a big deal? Well, remember, they are the biggest ever SPAC put together by man. And remember, Bill Ackman called it when he said they are targeting a mature unicorn to take public. I mean, when the announcement does come, this could literally explode. So being around $28 a share, this is one SPAC that I'm actually content on with my current position size. I am really looking at an all-in only if it goes below $24 or $25, but I don't think that will happen, as so far for me, PSTH seems quite resilient, and simply put, I'm expecting this to be a serious blockbuster merger. Okay, these are two SPACs essentially, and the two remaining SPACs that have yet to merge or have a merger announcement. IPOD and IPOF are basically 2 of 6 SPACs run by Social Capital Hida Sophia and led by the SPAC man and multi-billionaire investor and fund manager Chamath Palihapitiya. I don't really want to say much more than the fact that both of these SPACs ran up due to IPOE's announcement of a merger with SoFi. Both of them ran up to around $17 to $18, I think, because FOMO took hold and people didn't want to miss out on the next Chamath tweet, and yet both of them are right back down at $12. Once the market correction or crash is over, I expect the SPAC man will be announcing a merger with either one of these, so getting in now could see a potential massive pop. This is a speculative play, but Chamath Palihapitiya's track record is pretty solid, but let's hope Chamath does not find us another Clover Health, for example. Bridgetown Holdings Limited has not released much more news since my last deep drill all the way back in mid-December. Back then, there was news that they were in talks with Tokopedia, which would be a ginormous merger. This SPAC is led by none other than Peter Thiel, and check this, Richard Lee, who, if you didn't know, is the son of Hong Kong billionaire Li Ka-shing, who is the 35th richest man in the world. This is just big, and the only recent news was the announcement of BTWN 2. Does this mean they are close on a merger deal? I think maybe, and I think they are just waiting for the right time to announce this. BTWN has highs of around $17 previously when the rumor mills were spreading. Now with the market correction, it's trading at $12. That's a huge discount, and based on Thiel alone, I think once a merger is announced, this is going $17 plus with some ease. I have already added more shares of BTWN to my position last week, and I may add more if it somehow goes sub $12, but I don't see and I don't think that that will happen. Okay, let's end this video with my strongest conviction SPAC of all the SPACs in my portfolio, and that is Foley Trasimene Acquisition Corp 2 BFT. They will be taking Paysafe public very soon, and I've also made a recent update video on BFT and Paysafe. Simply put, this is and will be a long-term hold for me. I don't care what happens between now and 3 years time, but even at close to $15 a share, I am still buying and will be buying more, especially if somehow it can go to around $12. But honestly, I think the people holding BFT know how big Paysafe will be in the future. For me, it's another Square in the making, but with some serious market domination in the online esports and gambling platforms worldwide. And we know that is going to be an exponential growth market in the coming few years. With Bill MVP Foley at the helm, I see Paysafe as a serious mature unicorn, as Bill Ackman calls it, with huge double EPG. Remember, Square's market cap is currently close to 100 billion. Paysafe's pro forma enterprise value was at 9 billion. That's over a 10x differential, which I believe will be squashed in the coming years. Also, I just got my interactive brokers voting form through. The merger date is now set for the 25th of March, and we are all hands on deck. My conviction is so strong long term that even if Paysafe doubles or triples in value, I ain't selling. Why? Because
I like the stock
and I see long term 10x potential. Thank you for watching, and remember, this video is based on my own thoughts on the current state of the market and how I believe SPACs present us a great opportunity to invest for huge gains but essentially have potential losses capped at the SPAC price. This does seem way too good to be true, so do leave me some comments as to what you think, or if you have any questions. If you are interested in explosive exponential potential growth stocks that I do have in my portfolio, please consider to check out my other videos. For more huge stock picks, analysis and updates, please stay tuned and consider subscribing to my channel so you get the information first. I am the Simple Trader. I tried to keep this simple and will simply see you next time.